Imagine a crater in the center of the global economy, $300 billion deep. In late 2021, the world watched in stunned disbelief as furious protesters stormed the gleaming headquarters of a company most people outside of Asia had never heard of. They weren't political dissidents. They were everyday people, grandmothers, young couples, and factory workers, screaming, crying, and physically barricading terrified executives inside their own offices. Why? Because the money was gone. All of it. $300 billion in liabilities had seemingly vanished into thin air. At the center of this terrifying financial apocalypse was Evergrande. For decades, it was the undisputed crown jewel of the Chinese economic miracle, a real estate titan so massive it was considered entirely too big to fail. Yet behind the towering glass skyscrapers and the billionaire lifestyle of its founder, Hui Ka Yan, lay a chilling reality. The company wasn't just building homes. It was running one of the most sophisticated, high-stakes financial shell games in modern economic history. But how does a company lose $300 billion without anyone sounding the alarm? And how did a single corporation's insatiable greed arm a financial time bomb powerful enough to threaten the entire global economy? To understand the sheer magnitude of this collapse, we have to rewind the clock to a time when the modern Chinese dream was just starting to take shape. In the late 1990s, China was undergoing an unprecedented transformation. Hundreds of millions of people were migrating from rural agrarian villages to bustling, industrialized cities, creating the absolute largest wave of urbanization in human history. Everyone needed a place to live, and the government had recently shifted policies to allow private property ownership for the first time in generations. It was a gold rush of epic proportions. A former steel technician named Hui Ka Yan saw the ultimate loophole. In 1996, Hui founded Evergrande in Guangzhou. He realized very quickly that in a rapidly booming market, traditional real estate development was simply far too slow. You buy land, you build a building, you sell the apartments, and you use the profits to buy more land. It was safe, but it wasn't scalable. Hui Ka Yan did not want a successful business. He wanted an empire. So he tapped into a highly lucrative mechanism known as the pre-sale model. In the West, you generally buy a home when it is mostly finished. In China, Evergrande popularized the radical idea of selling apartments before a single shovel had touched the dirt. Buyers handed over their entire life savings, often taking out massive mortgages, for the mere promise of a future home. Hui Ka Yan took that pre-sale money, but instead of finishing the building, he used it to buy more land to start the next project, to pre-sell more apartments, to buy even more land. It was a dizzying, perpetual motion machine of debt and leverage. In the sterile world of high finance, they call this high leverage. In the real world, it looks suspiciously like a massive Ponzi scheme. But for a long time, this secret sauce worked flawlessly, generating wealth at a pace that baffled international observers. Evergrande operated on an aggressive, unforgiving philosophy known as the 5012 rule. They would start construction within 5 months of buying the land, pre-sell the units within 0 months immediately upon acquiring the permits, recover the initial investment within 1 year, and turn a massive profit within 2 years. Speed was absolutely everything. Quality, structural integrity, and financial safety took a deliberate backseat to sheer, relentless expansion. By the 2010s, Evergrande had reached the absolute peak of its formidable power. The company wasn't just a real estate developer anymore. It was an omnipotent conglomerate designed to project infinite wealth. They bought a professional soccer team and spent billions importing foreign star players. They launched an electric vehicle company which somehow reached a staggering market valuation greater than Ford and General Motors combined, despite never having sold a single car. They sold bottled water, invested in industrial pig farming, and announced grandiose plans to build massive theme parks. Hui Ka Yan became the richest man in Asia, rubbing shoulders with global politicians and projecting an aura of absolute invincibility. The world looked at Evergrande and saw the unstoppable engine of the Chinese economic miracle. But beneath the glittering surface, the engine was overheating, fueled by a mountain of debt so gargantuan that it actively defied mathematical comprehension. The first true crack in the armor didn't come from a global market crash. It came from the very entity that had enabled Evergrande's spectacular rise, the Chinese government. By 2020, Beijing had grown increasingly terrified of the monstrous, uncontainable debt bubble swelling within its housing sector. Real estate and related industries accounted for a staggering 30% of China's total gross domestic product. If the bubble popped, it would obliterate the national economy and severely undermine the social contract. So the government abruptly introduced a draconian new policy known as the 3 red lines. These were strict, non-negotiable financial thresholds designed to limit exactly how much debt developers could take on based on their cash flows and existing liabilities. If a company crossed these lines, they were instantly cut off from borrowing more money from state-backed banks. Evergrande, hopelessly dependent on a constant, aggressive influx of new debt to pay off its old debt and finish ongoing projects, crossed all 3 lines immediately. Suddenly, the music stopped. The lifeblood of the company, easy credit, evaporated overnight. What followed was a masterclass in corporate panic and a desperate, deeply dark cover-up. Staring down the barrel of total insolvency, Evergrande's top executives resorted to shadow banking and highly manipulative tactics to keep the illusion alive. They began aggressively issuing high-yield wealth management products to retail investors, promising astronomical returns of up to 10%. These were ordinary Chinese citizens looking for a safe place to park their hard-earned retirement funds. Even worse, the company turned viciously on its own people. Evergrande explicitly coerced its own employees into buying these shady financial products, heavily implying that their jobs and annual bonuses depended entirely on their loyalty to the company's health. Behind closed doors, they were essentially taking out massive payday loans with exorbitant interest rates just to keep the lights on. They ruthlessly delayed payments to suppliers, paid massive construction firms in increasingly worthless commercial paper instead of cash, and frantically tried to sell off bloated side hustles. But the hole was $300 billion deep. Tension became unbearable as rumors of missed interest payments began to leak into the international financial press. Global markets started to twitch. The whispers turned into shouts. The giant was bleeding out on the global stage. The facade finally shattered in the autumn of 2021. The climax was a spectacular, chaotic implosion that sent shockwaves across the entire globe. Evergrande officially defaulted on an offshore dollar bond. They missed a crucial payment to international investors, triggering a catastrophic cross-default mechanism that cascaded through their entire debt structure. The company's stock, once the darling of the Hong Kong exchange, plummeted by over 90%, wiping out tens of billions of dollars in shareholder value in a matter of days. As the news broke, the reality hit the Chinese public like a sledgehammer. Hundreds of furious, desperate investors descended upon Evergrande's towering headquarters in Shenzhen. Archival footage captured the sheer, unfiltered panic. People screaming at terrified executives, demanding their life savings back, staging massive sit-ins, and threatening self-harm in pristine corporate lobbies. One leaked video showed a high-ranking executive being literally held hostage in a conference room by irate citizens who had lost absolutely everything. But the most devastating, heartbreaking fallout was in the dirt lots and half-built concrete skeletons scattered across hundreds of Chinese cities. At the exact time of its collapse, Evergrande had over 1.5 million unfinished apartments. Because of the aggressive pre-sale model, millions of families had already paid in full for these homes. They were paying monthly mortgages to banks on properties that would now never be built. Young men couldn't get married because they didn't have the apartments they had promised their fiancés. Elderly parents who surrendered their life savings to help their children were left destitute and utterly broken. Construction workers went unpaid for months of grueling labor, and thousands of small businesses were dragged violently into bankruptcy alongside the giant. Court transcripts later revealed the profound, sickening negligence at the top. While the ship was sinking, top executives had quietly cashed out their own wealth management products early, securing personal fortunes before freezing the accounts of the general public. When Evergrande formally filed for bankruptcy protection in a New York court, it was the largest corporate default in Asian history. Today, the mighty Evergrande empire has been completely dismantled. In late 2023, the grand illusion was given its final blow when Hui Ka Yan was formally detained by authorities on suspicion of illegal crimes. His sprawling mansions have been seized, his mega yachts sold, and his legacy forever cemented as the primary architect of a monumental financial disaster. The company was ordered to liquidate by a Hong Kong court, sparking a multi-year process of scavenging whatever fragmented assets remain to pay off a minuscule fraction of the monstrous debt. But the true moral of the Evergrande story extends far beyond the tragic fate of one man. This collapse violently ripped the curtain away from the global financial system, exposing a terrifying vulnerability in the modern economy. It highlighted a deeply ingrained psychological flaw that governs global markets: the dangerous addiction to infinite growth. Evergrande became a $300 billion time bomb because absolutely everyone wanted to believe the illusion. They wanted to believe that property values would never fall, and that debt could be endlessly rolled over without consequence. Evergrande wasn't an anomaly, it was merely the most extreme symptom of a global disease. It forces us to look at our own heavily inflated housing markets and leveraged financial institutions with profound fear. When we actively reward reckless leverage and turn fundamental human needs like shelter into speculative casinos, we are building modern civilization on sand. As the dust settles on the decaying concrete towers of Evergrande, casting long shadows across the landscape, we are left with a haunting question. In a world driven by the insatiable pursuit of more, who pays the ultimate price when the grand illusion finally breaks?